Under increasing pressure from new competition, Tesla spent the past year slashing the average price of its models by roughly 25%. The Model 3 fell from $48,000 to $44,380. The luxury Model S, meanwhile, plunged from a high of $130,000 to $96,380. The cars, as they say, have been priced to move. It's an unusual business strategy, to put it mildly. I can't think of another point in the history of automotive when a brand that wasn't going out of business cut prices 20% a year, Mark Shermer, the director of communications at the research firm Cox Automotive, told me. Tesla is hoping that lower prices will drive up sales and slow the advance of the company's rivals, maybe even scare some of them out of the market altogether. But that's not what's happening. Lower prices are not translating into higher sales. The number of cars Tesla delivered to customers in the third quarter actually declined. Revenue is dropping, and the company's once fat profit margins are getting squeezed, down to 17.9% in the third quarter, compared with 25.1% a year ago. Competitors aren't being driven out of business, either. Once totally dominant in the EV space, Tesla's share of the U.S. market has fallen from 62% at the beginning of the year to only 50% today. Tesla, TSLA, adds a new clause in its Cybertruck's terms of service restricting customers from reselling the long-awaited EV within the first year of owning it. There's no shortage of Tesla, TSLA 4.22%, bulls out there. CEO Elon Musk has developed a cult-like following, and early investors who have stuck with Tesla over the years have been handsomely rewarded. The stock is up more than 13,000% since its 2010 IPO and has returned more than 2,000% over the past decade. Arguably, there's no bigger Tesla bull than ARK Invest's Cathie Wood. She made her reputation as a top growth stock investor in part because of a bold call on Tesla in 2018 that the EV stock would hit a pre-split price of $4,000 a share in the next 5 years, implying a gain of more than 1,000%. While many scoffed at that prediction, it remarkably came true in 2021. Wood has since raised ARK's base case price target on Tesla to $2,000 a share by 2027, implying a gain of around 1,000% again. We know from those updates that ARK hasn't purchased Tesla shares in more than 6 months. However, its funds have sold the stock more than 50 times since then, dumping more than 1 million shares of the EV stock. At its current market value, that represents more than $200 million worth of Tesla stock. With the electric vehicle industry seemingly in the midst of a correction with several manufacturers cutting back on production, Tesla is facing significant challenges, and the stock still trades at a premium valuation, making the rebalancing explanation for ARK's activity seem logical. There are some tangible things to point to as well. Sunday, the Financial Times reported that India was considering cutting tariffs on Tesla, ticker TSLA, electric vehicles. That lowers the cost of EVs for Indian buyers, but investors should remember that the Indian car market is small. About 16 million two- and three-wheeled vehicles were sold there in 2022, compared with fewer than 4 million four-wheeled passenger vehicles. Many new cars in India sell for $10,000 to $15,000, so Tesla's existing cars cost more than many consumers are willing or able to pay. Tesla might eventually put a plant in India where it would likely make a lower-priced vehicle, but the timing for that is far from certain. Tesla didn't respond to a request for comment about its India plans. A separate piece of positive news is that the European gas station and convenience store operator EG Group is buying Tesla supercharger equipment, according to the EV publication Electric. EG Group didn't immediately respond to a request for comment. Technical analysis, the use of charts to get a sense of investor sentiment and where a stock can go over the near and medium term, sheds more light. Tesla is following through after making a potentially key higher low last week. From a chart pattern perspective, it's now close to triggering a bullish cup and handle formation. A breakout through 226 initially would target the $241 to $242 zone, which would fill the earnings-induced gap. The shares will likely keep vacillating between $200 and $250 until investors get more information about fourth quarter deliveries, including of the Cybertruck, and how the updated version of the Model 3 is selling in China and Europe. Wall Street expects about 475,000 deliveries in the fourth quarter. That would be a record. An event marking the initial Cybertruck deliveries is scheduled for later this month.